If you want a business that is scalable and profitable, digital transformation is an absolute necessity. So that's why I've sat down with Steve Baxter, serial entrepreneur, former Shark Tank Australia, and venture capitalist, to do a deep dive into this subject. Now, as someone who has helped transform hundreds of businesses myself, I've witnessed firsthand the impact of digital transformation on business, and it's not always smooth sailing. So without further ado, let's get into it. Today, we are honoured to be joined by one of Queensland's most successful tech entrepreneurs, one of the Shark Tank stars, and former chief entrepreneur and veteran, Steve Baxter.
Avon, how you doing?
I'm very well. And look, thank you for joining us. I've heard you on some of the other podcasts, a friend of mine and also veteran Pete Liston. And I thought, what a great way to perhaps introduce myself and have a chance to have a chat. So, you've certainly got Australia's attention as one of the sharks, and I know that's not the be all and end all. That tends to be
they just fired us all too. You see, season 5's out, and they didn't invite any of us back, which was pretty funny. So it's the first time I've been invited since I was 17. It's hilarious.
Awesome. Wow. Well, nonetheless, you've dealt with a lot of startups, and I know that's not real, VC. That's very like a high pressure cooker moment where everybody's under a lot of attention. So as someone who's dealt with a lot of startups, in your opinion, what are the main reasons they fail?
Oh, well, the main reason is people, to be honest. So we focus a fair bit on people. We have to understand, how fundamentally capable they are of doing the business they're proposing to do, or attacking the problem or the space or the sector or whatever it might be. But, there's an unfortunate saying in our space is that most businesses die from suicide, not homicide. So it's people inside who blow them up, essentially. And the other thing is, if the business isn't going well, and lots don't go well and lots don't start well, a capable and a smart founder won't continue doing something dumb for very long. They'll change as they need to. So, it's about the people. It's not just only the people, but it's a large factor. They're definitely a go, no-go decision. Very binary on that.
Yeah, I tend to think, in my past military career as Intel, you've got the decision support matrix and your sort of go, no-go criteria and things like, you definitely don't continue to reinforce failure. But there is a point at which, and I guess sometimes it's a little bit hard to identify how far you go down to perhaps change a situation before you actually take an action to the contrary. Is there any, identification points or triggers or anything that would that people need to keep an eye out for, or is it just gut feel?
Oh no, look, I think as best you can in business, you should execute all decisions based off of data. Your gut has no nerve in, gut has no brain cells essentially. So gut feel might contribute, but really, if you can't back it with data, then I'm wondering what it is you're actually sensing. Yeah, there's a variety of triggers, I suppose, out there. And there's I'm mostly in the sort of tech startup software, internet e-space type things. So, and there's a very popular saying they call pivot. You should pivot, change your business, or change how you're approaching your business in order to actually chase the customers, I suppose, and the traction. So in that, that's true that can happen, and we see that quite a bit. I wouldn't say a lot, but quite a bit. But I have seen people who want to pivot out of actually good business, and they just haven't quite spent enough time yet to understand it. So it's case by case. But in the terminal phases, it's like your marriage is broken up, you've lost your house, your mates hate you. Maybe you should fold this tent up and walk away, right? We've had lots of those conversations. And all power to the people who've executed that, tried their best. But at some point, you may just be flogging a dead horse. One of the more powerful things you need to be aware of in business is timing. So you can have the best idea ever, but it's the wrong time. And you've missed the market window for whatever reason. Then it doesn't matter. You can have the 5 years and 3 years later, it's like, well, I had that 3 yeyears ago and no one wanted it. Well, you should have either waited 3 years to start it, or you should have held on for 3 years. But no, it's hard to know that. So timing it's a pretty random type thing. You can improve your timing and you can improve your luck by being more hyper aware of sort of macro and market type conditions. But timing is a big one.
Well, it's an absolute fire hose of information. And I know what you're saying about all the timing and stuff, like the guy with the sliced bread invention. and then the toilet roll holder. There were patents that took 10 years before the patent fell off before it actually became something that was viable in the market.
How could you patent a toilet roll holder? I get confused about some of these crap patents. A fucking toilet roll holder, excuse me. It's literally like it's a bit of wood you put through the middle of a toilet roll. No one thought of that. I mean, what was the hole in the middle of the toilet roll to start with for? I'm sorry, but what a load of crap. Oh, there's a pun.
Well, before the toilet roll, it was a handful of crap. So hopefully it did improve someone's life. Yeah.
There you go.
So I guess what makes and these are pretty broad questions and hard to answer in a very short time, but what makes a business investable, scalable, and saleable?
Investable. Well, as a financially motivated investor, and I hope most are, you sort of want them as opposed to other motivations. We need to make a return. So there's lots of ways that we can deploy capital out in the market out there. We have to understand that if we put in X into the front of this, generally portfolio of businesses, you'd like to think everything you pick will work, but no one's that good. At the end of whatever period, you'll get X plus something out, and whatever that something is. So what makes that investable? So once you get past the right team, all that sort of stuff, then you want to look at the size of the market. So for the return you have to make, can this business be big enough in that market in order to generate a return from that? So that is all those sort of financial metrics in that respect. This one was scalable, was it? I want to say
scalable and then saleable.
So scalable is where you get $1 worth of revenue for 1 cent worth of expense. There are businesses like that. There's not many. Software businesses tend to be better at that because they have, they're not shipping heavy things around. If you're going to ship heavy things around, you're going to have worse margins than someone who can just sit in a data center and ship nothing. Scale is an often misunderstood or misapplied term, I think, to be honest. And everyone's got a bit of a different view on it. I'm a software investor. I met a chap once who had I'm going to hide his identity because he told me some numbers, but he had an XYZ business. Met him at a pub in London, as you do, an Aussie guy with a business in Melbourne, at a pub in London. Software business, had an API method of delivery, essentially. He was like $23 million in turnover, and his profit was 17. That's just off the charts, right?
Yeah.
So that's probably the pinnacle in the ratio of what software can do. That's for sure. The last one, saleable. Was it saleable?
Yes. Yeah.
Well, you've got to have something that someone wants. I mean, so there's lots of reasons that various types of acquirers acquire businesses. If you have some sort of market lead, for example, we had a business here, Clipchamp. They were acquired by Microsoft back in 2021. I can't say much about, 3/4 of that phone book-sized document was about confidentiality, I swear. So I can't really say that much. But I mean, they literally had a market lead in some technology that was really quite desirable to the acquirer, Microsoft.
Yeah.
And Microsoft thought that they couldn't invest in competition and actually get the same outcome. So that acquirer made that decision. So what makes them saleable? So what makes a sale fall over? I suppose is if you have done irresponsible business. So, a large part of the sale process will be the due diligence phase, not just when you invest, but also when you sell. The acquirer will come and do all sorts of due diligence. And so, if you have poor quality revenue, for example, and you don't have contracts or long-term contracts for your revenue. So, you have to look at the quality of the revenue. So, and the higher the quality, if you can nail someone down on a 5-year contract where they pay you 1 year in advance, that's probably the highest quality revenue you'll get, if you know what I mean.
Yeah.
So when you haven't actually incentivized your key personnel into the business to stay in, because the acquirer they don't want to sort of buy it and then the next day everyone walks away.
Yeah.
Right? So you have to, if you just change the owner, the best thing is that all the staff are happy to stay working there and with the new owner. That will get you the best outcome there. Oh, there's a ton of things I could run through. If you've ever seen a due diligence list from an M&A, the thing goes for forever.
Yes.
So there's a bunch of things that people care about. But then for the most part, they ask a bunch of questions because they're trying to drive your price down too, right? So if they do want to get you, they'll ask you every question under the sun and they'll find something that doesn't really matter to the quality of the business, but it doesn't look good anyway, and they'll just use that as foil to try and beat you down on price, right? So for the most part, and if you run a good ship-shaped business, where you as the owner manager, for example, can be replaced without the business faltering, that will make you saleable.
Yeah. You mentioned obviously software, and there's a hell of a lot of software products out there. I think 2 years ago, there was something like 15,000 different products on the market.
In Australia alone,
Yeah.
15,000.
Yeah,
More
yeah.
than that.
No, I think that was just in the MarTech space, so like CRMs and
Oh,
things.
right. Okay. Right. Sorry. Yep.
And in the last, was it with low code platforms? Like I myself over the weekend just built a HR app internally for us, and that was with a low code platform. So it doesn't really, having an app doesn't necessarily mean, or a bit of software doesn't necessarily mean you've got something worth investing in. To my mind, it would be more if you've got something like a new type of technology, like that API that you mentioned, or some kind of patents, or I think it. Even though tech seems to be quite fast, it sounds like a lot of the traditional things really do just need to be there. You need to have good people, good financials, and a good idea.
Yeah. Look, you need to. I think that we have a term that we look for. We look for many things. I have two businesses. I have our 1013 traditional software business, which operates as a syndicate with about 650 investors, and my other business, which is called Beaton Zone Venture Partners, which is a defence tech orientated business for sovereign Australian companies. But in the non-defence business in 1013, I've actually forgot the question you're asking now. That's terrible, isn't it? Sorry,
No, no, that's all right.
my kids are bursting the room any second now, so I'm probably just keeping an ear.
It was more of a statement you were going to contribute to. So I was talking about how most businesses, even though they might have software and leverage and scale, that they still hold true to some traditional requirements like good financials, good people,
Yeah.
good processes.
Yeah, but you can. And the thing is, you'll always find outliers. And I make a lot of public statements, a lot of public, not a lot, not so much since COVID, or at least that
Yeah.
stupid reaction to COVID, excuse me, anyway. So, and I'll say things and people say, oh, but there's this example over here. So, well, yeah, okay, there's one example out of 100. A fat jockey occasionally wins. You don't bet on a fat jockey. So you've got to be able, especially as an investor, you've got to look at the middle range of things that are going to actually lead to success. And we're also venture investors, so we take some pretty wild bets at times, what we call venture scale bets. It's like these people are attacking a market that's huge. They could be the winner and be the only one that like a market, an N of one, we call it. So they could be it, right? They could be the Amazon of their space, for example, and that's their bet's worth taking. They don't come along very often. They probably come along. Well, we don't back them when they come along, I suppose. That's interesting. But yeah, look, in general, if you have a good sort of standard business where you have you have strong margins and understand your margins, you understand unit economics, what things cost, how long customers stay around for, what drives their behaviour, then and obviously you're in the CRM space and the Marcom space. That means that space was it plays towards those sort of outcomes, right?
It's predominantly services, but yeah, everything's measurable to an extent. You can control things. You know that if I'm going to bring a client on over here, I can afford to do that over there. So it's pretty, 1 + 1 = 2. So it's pretty understandable. But I guess those leverage businesses are very much, product based, or some kind of, they don't always require a person's time or expertise, so they scale faster, provided you could throw more money at production or storage or distribution or something like that. And I recall listening to the US Shark Tank, and they were talking about things like the first thing people say when they get in, the market's worth $50 billion. And, their take was always sort of like, yeah, the market's that big, but how do you propose that you're going to get all of the market in terms of market share? What's your sort of perspective on when people sort of say to you, the market is this big?
Look, I'd mostly ignore it, except if they said, "Look, we're like the market in Australia for this is like 150 million bucks a year," and we're like, okay, right, because if you get 1% of a market, you'd have to be happy with this. You probably have a nice lifestyle business, and 3, 4, 5, 10% of a market is something quite huge. Now I've been involved in businesses that had that. Probably, my first business as an ISP was probably I think I was quoted as being one of the 10 largest in the country, and probably had maybe 5, 6%. We were only based in Adelaide, and Adelaide's only 10% of the population anyway, and we're probably half of that. So, a bit unusual. Our second business, Pipe Networks Telecommunications, we built a market category, to be honest, in the wholesale services we offered. But even still, we had some fast followers. So, and so we maybe got 20% of that market, maybe. We had some pretty fast emulators. So, and there's also like close substitutes to what you do as well. So, okay, so you might do X, and the competitor is doing like, Y, but X and Y in the alphabet are pretty close together,
Yeah.
if you know what I mean. So
Yeah.
you could do 90% of X with by using Y. So you've got to be careful about substitutes. A lot of people ignore that as well. But I get more concerned when I hear about people who've supposedly analysed the space and found it to be too small and choose to continue. Now, they might have actually analysed the space and not figured out how big it is. That's also a problem.
Yeah.
But I sell my defence fund now. I sort of say that Australia has a very easy identifiable 32 in US dollar terms, $32 billion defence budget, which we do. It's very easy to find out. We have a concept what we call the allied addressable market, which is Australia, Five Eyes plus NATO, for example, plus Ukraine. We threw the Ukrainians in. They're $5 billion. They were. They're probably a bit more now. So, but that's worth 1.2 trillion. But there's a lot of stars there. This is, and in that we then say, okay, inside, and then the US is 852 and all the rest. So we break that down and we sort of say, well, that's then into the innovation budget. So what do we then link back to closest to defence tech? Well, okay, let's look at the innovation budgets. So in Australia, the DIH or ASCA, and in the US, they have DARPA, and the EU's got DIANIA. All these weird, military. They love their acronyms, right?
Yes.
So we sort of then go, okay, there's that indicates the size of the market, but this is a more indicator of growth and how it's going. So if you can identify a large market and then suitably understand the stratas that exist inside that market, then and then alliterate that to investors, for example, and that's a lot better.
Well, yeah, I was just thinking adjacent markets, but yeah, if you're saying strata within a particular market, and by adjacent I mean, say for example, we do a product. If you say the global market is X, because you mentioned the Australian defence budget, but then you're mentioning all of those other areas. In terms of our service business, we're doing now working out into India. I've got clients in Japan and Tokyo and same place, Japan and Malaysia, Hong Kong, and that sort of thing. But then you can access things like, Australian government have grants programs for export. So you can find, clever ways to help fund your business or your processes or your services. And you mentioned patents and things before, and identifying when to stop. My wife had a patent for a breastfeeding cover, but unfortunately, there's a lot of alternatives, as you mentioned. And we sold a couple $100,000 worth of these things at expos. Then hit, and then that was it. We had a brand. We were starting to go well. The situation of expos being blocked and not having people that could walk up and we could show the product to. It was a huge education problem. But look, I remember walking past at these expos, past a few products that had been invested on Shark Tank, and they've got their big banner up going, "Look at this, we got funding from." So branding plays a huge part in that as well. And you've touched on something before about the ISP business, which is something I'm sure a lot of people want to know. I'm sure everybody's dream, particularly if you're in business, you want to go big most of the time, unless you want a lifestyle business. But going from lounge room to listed is quite a quite a feat. Working out of your Marriott Quarter building with your phone lines all the way through to ASX listed. How does the average Joe, I guess these are pretty silly questions if you think about it, but what would be your advice to someone who wants to go from lounge room to listed?
Well, in all fairness, my first business didn't list, was my second one. So my first one started in the lounge room. The second one started in a real premises, I suppose, and that's the one we list. Listings are capital raising, to be honest. So it's a way to raise capital. There's lots of ways to raise capital. The easiest way to raise capital is from a customer. You go and sell something, regardless of if you go out to an investor, regardless of the type of investor, and then to raise money, you've still got to then go back and sell to a customer. You never get to avoid that step. And half of the questions investors will have will be about, do customers want this? So the more selling you do before you go get to investors, the less embarrassing answers you have to those questions, I suppose. So when we looked at listing, our business was going quite well. We had about a dozen staff, I say 14 staff at the time, had about $3.5 million in revenue. It was quite a profitable business, to be honest. We wanted to expand. We actually looked at how we got the capital to expand. And this should be the mature way that everyone looks at it. Okay, you have a business, or what do you want to do? Okay, how do I I look at a business plan. I take that business plan out 18 months and go, well, okay, in 7 months' time, I run out of cash. I've got a $500,000 cash hole. How do I fill that? There's ways you fill that. You can do it with debt. So, for example, you can, maybe, you have some things you have some things that you could sell, for example, or you can have ways that you can borrow, or you can go and seek an equity investment as well. So, and then there's a variety of ways to get that. You have, various levels of family and friends. You might have angel investors, all the way through to sort of more sophisticated, professional sort of sophisticated investors, all the way through to, a listing on a stock exchange, which I'd recommend you undertake with extreme trepidation. It's a good thing, but if it goes bad, it goes spectacularly bad.
And very publicly.
Yeah, look, it's just, once you're unloved by the stock exchange, it's hard to get loved again. That's probably the size of it. Not that it doesn't happen, but, and the Australian Stock Exchange is a place where I'll be, and there's some great success stories, don't get me wrong here, but for most of the listed stocks, people want a divvy in their tax credit, right? Their reputation credit. So, it's not your hot frothy exchanges here in the US where people are willing to speculate the crap out of things. So just be aware of the sources of capital that you're seeking and what other sort of burrs they might come with.
I think you're talking about that it's a way to acquire capital, and it's part of your overall sort of like weighted average cost of capital kind of thing. I would tend to say that a lot of, well, probably for the last few years, getting funding or getting funded was very much glamorized, and it sounds to me like you want to have your stuff nailed, and you just can't do what you want to do unless you get a little bit of extra juice in the tank, if you will, rather than just sort of like, I've got an idea, let's grab money from everyone, and then hopefully something will happen.
Probably, yeah, it's probably not the best strategy ever. It's there's benefits to listing as well, for example, but it's also not easy at the same time. You've got to go through a structured prospectus process, and it's good, and the due diligence process leading up to listing is actually really good. You get to look at a lot of things, to be honest, understand your business a lot better. But and then once you're on there, that have an amazing sort of market release, their information release facility, their market release platform. So everyone, almost probably every family in Australia, probably 90% of families in Australia, actually have stocks in their portfolio, so they're aware of it. They know a lot. Probably half of those, again, probably at least casually play the stock exchange with a bit of an E-Trade account or something. So it's a good way to get some exposure out there. So, yeah. But it's I'm a really good chap, a really good mate, and he was actually our company secretary at the first business we listed. He was my chief investment officer for a while, and he's doing some other work with me now. And he always says that it's a bit like a magnifying glass. That when things are going really well, they look really well. They look really good. When things are really bad, they look really bad. They look, it'll magnify that.
Yeah.
Good or bad, it'll magnify it essentially. So you be very aware of that. So
yeah, very much a double-edged sword by the sound of it. So having heard you speak on that other podcast with Pete Liston, you were mentioning about processes was like one of the most important things in any businesses. So I guess what makes a good or a bad process? That's what in my mind makes people scalable. So what would you say is a good or bad process?
Look, one that's maintained, one that's fit for use, and one that's maintained. So for anyone in your business, if they get proverbially hit by a bus, bad term, isn't it? Then you should be able to take the next lowest skilled person you can find in the world, put them in that position. They should be able to do the job, if you know what I mean. So at least with minimal sort of training and interference. The process doesn't matter. I think that the way you actually arrive at the process, the way you edit the process, and the way you inform everyone what the process is probably matters more. So it's that structure around the process. So it's like someone goes, it's complicated to do this. So someone writes a little procedure on an internal wiki, or now it's a SharePoint on something. Who really cares? As long as it's there, preferably where it's editable and traceable through historical records. And then in my first business, we had a bit of a mantra, which was essentially that you'll be warned if you are knowingly doing a wrong procedure, you will be warned for dismissal. You fix the procedure and then you proceed with it. It just, don't knowingly do something dumb. Okay, because it's in the manual. I know there's the wrong way to do it. Stuff that, fix it.
Yeah.
So everyone else can get on there. So, and we had a little procedure, a little internal mail list, I think it was, that must have been a mail list back then. There was very little else around that allowed people to say, hey, this has been updated for this, and this is the new procedure. Go and check that out. So sort of promulgating, that's a very military word, promulgating.
Yep.
Promulgating those edits and changes is just as important as having the procedure in the first place.
Yeah, there's new terminology around, it was an after action review, and then you've got
Post-mortems, we call them in business.
post-mortem. Yeah, pretty much.
It's got to cut its skull open to find out what happened. Basically, it's a post-mortem.
Yeah. Well, I mean, with all the military acronyms, there's plenty of those, and lots of eye rolls from all the ex-military guys in our business. So it's always fun. So in terms of governments incentivizing businesses, having been involved in the Office of the Chief Entrepreneur, there's a lot of things around digital transformation, about upgrading systems and technology and all that sort of stuff, and having run a tech industry yourself. How important is this for everybody in business?
Government involvement.
So there's grants for investing in tech, and basically they're trying to promote that businesses implement systems.
Yeah, look, you'd hope there's a world where it didn't. I'm a libertarian, so I'm going to come back with the hey, don't tax us, don't regulate us, and so that's going to be me. Not that I think we can't exist without some form of regulation. We have way too much now. So I think that my preference would be that we reduce regulation, reduce tax, and therefore we'd have a much better functioning market. That the issue of regulation, if you're a small business, is big businesses love it because they can afford to staff the regulatory desk, whereas smaller competitors and smaller startups can't. So regulation is anathema to competition. So for the most part, I understand governments do it with respect to things like you mentioned before, the export marketing development grant, not by name, but that's the grant you can get for marketing your wares overseas, essentially, which is paying back a certain portion of your cost to undertake that exercise. There's the research and development R&D grants, which are highly, I think are good and are highly utilised inside the technology sector, which is good. For me, if they tax us less, they need to give less of it back. That's actually incorrect. I mean, so most of those businesses, a lot of the businesses who get that don't pay any tax at all, don't pay any income tax at all. Excuse me. They obviously pay their employees pay PAYG and that sort of stuff.
Yeah.
Yeah, and then there's invested tax incentives, which aren't grants. They are the government foregoing tax, for example, to actually encourage certain sorts of behaviour with investors. So they're not a cost. I hate it when people sort of say that because we're not taxing someone, therefore it's costing us. It's a load of crap. Excuse me, it's our money, not theirs. How dare they?
Yeah.
But I mean, and so I like those, to be honest, because it's reducing tax. It's actually, and therefore incentivizing certain behaviour. And it's still, to a large degree, very, very voluntary and the way it's accessed.
Yeah. So I guess in terms of the government's incentivizing programs, they're trying to mold and shape the behaviors of businesses and getting some of the roadblocks out of the way for businesses to grow. But they've got a lot of interest rates and shortages of staff and there's global tensions in the markets and embargoes and things like that. It's a very difficult, tough time for most businesses to understand, I guess. What are some tips, perhaps, to navigate complexity in business?
Well, look, business was never meant to be easy. If it was easy, everyone would do it, and the prize is worth fighting for. So therefore, don't expect to be handed it. So every day will probably be a new challenge if you're going to get into business. So what are some of the tips for handling that? It's a pretty broad set of problems, I suppose, and areas. So look, for the most part, I'd say I'll go back to telemetry in the business. I understand, let's say telemetry, we build software, we have companies who build software products, and we encourage them to load them to the gunnel with ways that you can understand how a customer's using their product. So if a customer's not making up the whole way through the journey with that system, whatever it might be, you can understand where the hurdles are. They may be using another part of it you didn't expect. And that's the Instagram story. If you've ever heard the Instagram story with the app that's bourbon, it started out as a bourbon rating app that had a pretty little photo filter. No one was rating bourbon, everyone was using the photo filter. They had enough telemetry to understand that. and then pivoted their business, and now we have Instagram. So undertake it all with data. And I remember, I mean, it hasn't happened in Australia forever. I remember when we just barely skipped through. Sorry, we did have a recession technically during. I shouldn't say that, but we had a back in just post GFC, post the Sydney Olympics.
Yeah.
There was John Howard had to do all sorts of things to stop the economy going into recession, because it was just we had a big sugar hit basically, and everyone just wanted a break for a while.
Yeah.
And I think he did some stuff with the fuel tax and other bits and pieces to sort of prevent the economy crashing. But we went from we had a shop front in Adelaide where people used to come in and buy access to the internet, because it really was hard to do. People used to mail us checks in. It was really hard to do with even credit cards back then. Were near impossible. And we used to have a line out the front of our store. It wasn't a small store. We'd have sometimes sort of 15, 2 dozen people outside the door. And then all of a sudden one day that just stopped, and no one turned up for about 3 months. And that is literally scary as hell. And we didn't have that wide. I mean, when that hit so fast, there was no telemetry could help you, if you know what I mean. So, but yeah, act based off data. Gather all the information you can. The gut has no brain cells. Don't do gut reaction, or don't do the gut reaction, and manage it with a really intelligent approach to information you've gathered.
Yeah, yeah. You also had a business disruption in your ISP. I believe it was to do with Telstra.
Yeah, it was a big one. Yeah. That was before the recession one. That was when Telstra basically stuffed up and installed a piece of equipment called the RIM. They weren't very well known back then. In the DSL days, in the sort of early 2000s, mid 2000s, they became very well known for poor quality connections through DSL. But back then, because we were ordering so many telephone lines, Telstra said, hey, we can just pull a fibre optic cable in, and instead of actually pulling individual copper from the exchange, we can just do it from your back room. And they just stuffed up. And literally, we were having customers leaving us hand over fist. It was really quite scary as well. And I'm getting a confidential settlement out of Telstra over that. I never wanted the confidence, because screw them. They almost sent us broke.
Yeah.
So that was that was scary days.
Mm.
And we knew what was going on. Okay, still about data. So we had a computer-based business. People used to dial up into our modem, use their modem to use a telephone line to dial our modem, which is attached to the computer, and we could get telemetry off the modems into the computer, into our log files. And we can see that instead of people connecting at 33.6, which was the high speed of the day, they're only connecting at 22 and 1900 and 19,000, and really low speed.
Yeah.
And back then, if you didn't connect it, if you had a 33.6K modem, you didn't connect at least 28 or above, you'd hang up and do it again, because K bits a second, it's really slow, right?
Yeah.
So, and we could see the speeds just weren't there, and so we had a lot of information that we could sort of go to our telco, the only one, so hey, this is what's happening. And it still took them, golly, I don't know how long, but weeks if not months to pull their fingers out and go and upgrade the software, and hey, bingo, it all worked. God bless them.
Yeah, wow. I think business disruption's never fun. So I guess the sounds like you got to be ready for anything, and then not when you're not ready. It's you just got to deal with it and chew like hell.
Yeah, we've got that right now. I mean, we're in the venture business, and in 2021 was an amazing year for the entire industry. Late 2022 and 2023 have been quite quiet, which is not good. When you're in the money managing business, you make a fee for managing people's money. If there's not as much to manage, you don't make as much fee. It's about that simple.
Yeah.
So that's been. We had a front row seat, and we could see it coming, so it didn't surprise us. And we're still trying to understand where the bottom of that is, and I think it's probably a good year or two out, to be honest. But we're somewhat sanguine there. We don't have a business that people have to use. We put an investment out to a bunch of investors, a bunch like 650 great customers, about 10 times a year, and so there's no urgency. No one's going to die if we don't put an investment to our investors. If you didn't provide your internet service, or we had fiber in the second business, we had fiber routes and data centers and submarine cables. That was, you had to get that stuff fixed like ASAP. So investing business is quite sedate in comparison.
Yeah, it seems more supply chain in the sense of a bit more slow moving, if you will. So that's I guess that makes it a bit easier. Well, it's been absolutely amazing having you on the show today. Thank you so much for joining us and helping us understand a bit more about the complexities of dealing in or working in business. So, was there anything else you wanted to share with us before we go?
No, not at all. No, thank you very much for your time.
Well, thank you very much for that.